Okay, well, we'll get started today. I'm not going to talk about any trades specifically. Let's see, I'm having a little bit of a trouble with this mouse. Let's see if I can maybe, okay, I'm going to have to get used to the, just how this is going to work. I prepared a little bit of a PowerPoint just to help keep me on track here today. So let's see, today's agenda. Well, we have an earnings calendar at OptionSlam.com, and we try to provide what we believe is the most accurate earnings calendar available anywhere on the internet. So I introduce you to the calendar. We also have something that we call the EVR. It is an Earnings Volatility Rating. We rate all the stocks that we track, which is about 6,000 stocks that we follow, approximately half of which are optionable. And we rate each stock as to how volatile they are upon their respective earnings announcements. I would like to cover a little bit about our implied move tracking, what we do to track the implied move ahead of the earnings event, and how some of the data and information we collect as to how that stock behaved in relationship to its implied move. Additionally, we have another page on each stock that tracks how that stock performed post-earnings. The earnings event always seems to cause, a surge, one direction or another, and then the question becomes, how long does that effect remain for any given stock? And as you'll see, I think, and you study the data at OptionSlam, each stock develops its own personality as to how it behaves at and around and post earnings. Our most popular tool at OptionSlam.com is the stock screener, also known as the upcoming earnings tool. And it is just a stock screening tool that allows you to do a variety of filters, and we'll try to touch on that briefly as well. Also, there's quite a few personalized features available at OptionSlam, and I'm hoping to find the time to get into some of those. Our latest effort is developing a backtesting tool, and it is in beta mode, but it is available to our insider members. Our insider members are those, that's the name we give our paid subscribers, if you will. And it is available for use, and we are in the process of building it, building the database, and maybe we can find time to take a look at that as well. So before we get started into the website itself, I'd like to talk just a little bit about trading earnings. Earnings events do provide opportunity. First of all, they're a known event. It's something, unlike many of the trades that we enter, it's something that we can actually plan for days, weeks, and sometimes even longer in advance. In fact, one of my favorite strategies is a delta neutral double calendar, which is generally initiated many weeks ahead of the earnings event. But it is totally dependent on the earnings event, implied volatility building, and choosing the proper strikes and choosing the proper expiration cycles, knowing when the earnings event will take place, when to enter the trade, and when to enter the trade are really key components to a successful and profitable strategy. So earnings events attract attention, and this tends to increase volume. Stockholders are looking to protect their positions, both long and short positions, and many times by doing so with options or option strategies. Speculators start to swarm as the earnings event is approaching, and volume typically starts to increase at and around earnings events. More volume means more liquidity. Bid-ask spreads tighten, giving us better opportunity for fairer pricing getting into our earnings trades. More liquidity allows us to get in quicker, easier, and close positions quicker and easier. And implied volatility is known to be building as we approach the earnings event, and of course then there's the implied volatility crush immediately following the earnings event. All of these things are opportunities, provide us opportunities to build and design option trading strategies around. Let's see, some of the most obvious opportunities that earnings provide is to, for example, buy premium going into an event, knowing that the IV build will help to offset theta decay. Or sell premium right before an earnings event, knowing that once the earnings event is out, the implied volatility crush is going to immediately benefit the trader. So knowing when a stock is going to report its earnings is really key. So like I mentioned earlier, OptionSlam.com, we strive to be your most accurate source for earnings dates. We monitor many of the popular and some of them reputed to be most accurate earnings calendars out there on the internet, and as well as several brokerage houses' earnings calendars. If they all agree, then fine, we publish the date. But when there is a discrepancy, in other words, if there's a discrepancy about when a certain symbol is going to have an earnings date, one of our data sources or data feeds tells us one date, and several of them all agree on one date, but any one of them disagrees, then that stock symbol will go to our future conflict report. And then we have a team of researchers to get on it, scour the internet, go to the company's investor relations website, and we manually try to find and get the latest facts. So let's see, I'll just show you, if we go to this website, let's see, we can go to, here's the earnings calendar. The website is organized just across the top. Of course, you've got these tabs, and if you hover your mouse over the top, you can get the drop down and go to various pages throughout the website. So if we go to the earnings calendar, and we put in today's date, and there's only a very few filters on this particular calendar, just all stocks, stocks with options, stocks with weekly options, ER, daily volume, and stock price. Those are the only filters, but the stock screener has many more filters, and we'll get into that in a little bit. If we just submit this, we can find out that we've got a list of stocks. This is going to produce a report for you of the stocks that are reporting today after the close, as well as tomorrow before the open, and simply because today is the final trading day within which that you can place a trade prior to the earnings event itself. So you can see Tesla's, for example, ready to report today after the close. And what I like to do is when I'm on any of the tools from OptionSlam, whether it's the earnings calendar or the stock screener, whatever tool I'm using, I like to preserve that tool and then just right-click on a stock. For example, I can right-click on Tesla and open that in a new tab. That way I preserve the list so I can come back to it and choose to further investigate other stocks that happen to be on that list. So I'm going to try to provide for you guys today a few tips and tricks on how I like to navigate the website. So now I right-clicked on Tesla from the report, and open in a new tab. And what I wanted to show you is that if it says next earnings date is August 3rd, and there's no mention of estimated or the word estimate or estimated, then this is a confirmed date. We've learned not to use the word confirmed anymore because it kind of got in trouble a few years ago when, a company confirmed their date and then they reported early. And then traders say, well, you confirmed it, and, tried to blame us for a company reporting early. Of course, obviously that's completely out of our hands, but it was enough of a lesson that we learned to avoid the word confirmed. So if I simply type up here in the top right-hand corner on almost any page throughout the website, I can type in a symbol and hit enter on my keyboard or click that little red go button. And then you see, since Apple reported, Apple's earnings history page, since Apple reported recently and they have not set the date for their next earnings event, now you do see the word estimate up here. Next earnings date, OptionSlam estimate, October 25th. So we have an algorithm in which we have built that very accurately estimates when the next date is going to be. Much better than anybody else's algorithm that I've seen. But so we're pretty proud of that estimating, and that actually comes in very handy. These OptionSlam estimates come in very handy for putting on certain strategies weeks ahead of even the company making the announcement of when they're going to report earnings next. So basically that's it. That's how you can tell if you see the word estimate or estimated, then it is not confirmed. And as we were on the page Tesla prior, and you do not see any wording using estimate or estimated, it simply emphatically states the next earnings date is August 3rd, 2016 after the close. This is what you can consider a confirmed date from OptionSlam. All right, so EVR, stocks sensitivity to earnings equals the earnings volatility rating. This is something that is exclusive to OptionSlam.com. We rate every stock and assign an earnings volatility rating to each stock. EVRs range from 0 to 10, 10 being the highest, and most stocks are going to fall in the 1 to 3 zone. And stocks that are getting to be more sensitive, in other words, stronger and more frequently strong reactions to their earnings events, are going to have EVRs 4, 5, 6, and even higher. One thing that we've noticed recently over the last couple of years is that most stocks, EVRs, are on the rise. It appears to me that earnings is playing a more important role across the board. In other words, stocks are moving more due to their earnings events than they have in the past. This is seen, I'll just quickly go back to the home page. We actually have a chart on the home page of EVRs, average EVRs of the S&P 500, all stocks in the 500. And as you can see, back in 08 EVRs were, in 09 EVRs were pretty high, but here we are on the rise again. Okay, so I don't know if that says something or not. Take it for what it's worth, right? So let's take a look over at OptionSlam. I'm going to jump back and forth here, and we'll go back to Tesla. Now, Tesla, when you go to a stock-specific page, at OptionSlam, by default, you're going to be on the earnings history page. But this black bar turns into several different links of, and I mentioned earlier, the post-earnings page and I move weekly page. And there's a few other pages here as well. We are on the earnings history page. And if you scroll down to the very bottom of the page, you will see a history of what the EVR is now. Current EVR is 3.5, a little higher than the norm. I mentioned that the norm is, for the great majority of stocks, is 1 to 3. So 3.5 is a little higher than the norm. And immediately following today's earnings event, we'll have the one-day reaction. Tomorrow's trading day will then become part of the EVR formula, and the EVR will change. It will no longer be 3.5 after tomorrow's trading. The one-day reaction, let me just tell you just a little bit about the EVR. What it is, it's a formula that looks at the 12 most recent earnings events. If I use this button here and I go list all history, being on the earnings history page, the EVR looks at the 12 most recent events. So that would be 2, 4, 6, 8, 10, 12. So it would take into consideration all of these earnings events here. And then after tomorrow, this earnings event here from August 7th will fall off, and the new one will come on. And it is a weighted formula, giving more weight to those events that are most recent in history and less weight to those events that are further back in history. And then, like I said, as a new event comes on each quarter, the 112 events back in time, 3 years essentially, falls off, hence providing a new EVR rating at the money straddle pricing as an indicator for the implied move. If you think of implied volatility as is obviously a very important component of option premium, especially as we approach an earnings event. And if we look at primarily, I personally very rarely trade anything except stocks that have weekly options. It would be very rare that I would trade anything that doesn't have weekly options. So therefore, I'm mainly focused on stocks with weekly options, and then therefore focused on the implied move based on the front week weekly. Those options which expire immediately after the earnings event. So in this case, for example, Tesla reporting today, I would be most interested in the implied move that is provided by the at the money straddle of the options that expire this coming Friday this week. We start tracking the implied move of stocks 1 to 2 weeks prior to the ER, and that data is available right on our website. So you can see how the price of the at the money straddle has evolved over the last couple of weeks, and I'll show you some detail of that. And then we also track the historical move, the actual one-day trading move of a stock after the earnings event, and represent it as either inside or outside the implied move. So let's go over to, before we get into post-earnings tracking, let me go back to the site, and we'll go back over to, let's see, this is, we are on the Tesla page. This chart, by the way, that populates is provided by one of our partners, TradingView.com. And it is not a live chart. It is a one-day delayed, but there is a live interactive chart here available. You simply click on that link, and it pops up a live interactive chart. These little indicators, I think you can get rid of those simply by clicking off the light bulb, and you can investigate this stuff. This is a pretty customizable little chart. It just gives you an opportunity. I know that most of you are going to be interested in using your brokerage firms, charting software, but it's just a quick, easy way. If you're after hours and you don't have your brokerage platform open, this is a quick, easy way to do a little bit of charting. So I just wanted to point out there is a live chart, and this one is not live. If we go over now, we are by default on the earnings history page. Let me just quickly review that before we go to the implied move page. The earnings history page shows, I'll just review quickly what the columns are. The earnings date, today's earnings about to happen today after the close. And then if we take a look at the last earnings of Tesla, it was May 4th. The final price prior to the earnings event was $222.56. So obviously on May 4th, that was the closing price of Tesla. After hours move, of course, the stocks trade after hours. And then the following one-day move, this is what we have a lot of data for. Right now, I have all the data for all of the tracking that we've done of Tesla for its entire history on the screen. And open, high, low, close of the one trading day post the earnings release. And then converted into percentages. The closing move, we're down, the last earnings event, down just about 5% down from the pre-earnings close. And the max move during the trading day, the most it was down was the low of the day of 209.79, which is, in percentage terms, 5.73% down. We also have, I'm going to get into some customizable features, but one of them later in today's presentation, but one of the customizable features that we have, and I'll just touch on it briefly, is right now we provide mean and median moves, absolute data, irregardless of whether the direction was up or down, just absolute data, and raw cumulative data, kind of indicating whether this stock has been cumulatively on the rise after earnings events or showing some negativity falling after earnings events. So we have both absolute data in these two columns and then raw data in these two columns. And you can customize this simply by clicking on this little exclamation point and going here and simply changing the amount of earnings. You might think, well, for this stock or for all stocks or however, this is really subjective for each trader to decide him or herself. You may say, well, for this particular stock, I don't want my average move calculated over the last 12. That's too many. Maybe you only want to go back 6 earnings. So change that to a 6. Click Submit Change, and immediately we recalculate the max and median moves. Now are recalculated for you based on the last 6. You can pick any number you choose. The other place to customize that information, as well as, by the way, how many earnings events are shown on each page, you can change this as well as the calculation right here, or you can go over to this right sidebar menu to the My Profile link over here, and that is another opportunity for some other customization. Okay. So let's now go. I do get sidetracked, but there's so much to show you, and so many things to show you. I just don't have time to get across them all here today in today's webinar. But as I think of things, I just like to bring them to your attention, even if ever so briefly. So let's move on. I wanted to show you quickly about the Implied Move weekly page. The Implied Move weekly page now, and this is specifically for Tesla. We post up here at the top of the page some data that is specific to this stock. The one that is most important to me, as I mentioned earlier, is the Implied Move weekly. That is the one, that is the number that I'm focused on. Why do we show you an Implied Move monthly? because some stocks don't have weekly options. Therefore, the only implied move we're able to come up with is through the available pricing of the monthlies. Depending on how much time there is, of course, out to the next regular monthly, third Friday of the month, is going to be represented in a discrepancy here between, this number and this number. And the big difference mainly is obviously time value. Whereas I personally feel the greatest majority of this 6.7% is very little of that is time value, especially given that these weeklies expire in 2 days. This 6.7% is the great majority of that move is suggested to be due to the earnings event that happens today after the close. And if you come down here and take a look at these columns here are the implied move as we approach the earnings event. The implied move, for example, last earnings event, May 4th, started out, when we first started tracking the implied move, it started out to be about 10%. But by the final day, May 4th, the implied move had deteriorated some down to about 8.75%. Now here's an instance with this particular stock where February 10th earnings event, the implied move started out in our beginning tracking at about 10.65%, but as we approached the earnings event, the implied move actually climbed all the way up to almost 16%. This is the exception, not the rule. We do know that implied volatility builds going into earnings. However, theta decay usually outperforms implied volatility build when it comes to the increase in an option premium component. So let me take you now up to this chart up here, which just represents graphically the information that is available here below in this table. Let me see if I can position this so you can see the chart above and some of the table below. Well, I can do that first. I think you should be able to see the May 4th earnings at least. So what this chart up here above pretty much does for you is it just gives you a quick graphical of, does this stock move inside or outside of its implied move on earnings events? And so here are let's see, we got 1, 2, 3, 4, about 5 earnings. The 5 most recent earnings events are on the screen, and the little orange rectangle, vertical hollow candle, if you will, is suggesting a low of 203 and a high of 242. That is the implied move based on a $19 move, okay? A $19 move above and below the current price of 222, okay? The red candle within the hollow candle is the actual one-day move post-earnings. And you can see that the actual move was inside, completely inside the implied move. And this is typical. This is what we seem to find, most generally speaking, is that implied moves are generally overstated. Stocks, more often than not, trade within their implied move. Stocks that trade outside of their implied move often will thereby generally see a higher EVR, earnings volatility rating, because they're wild movers and they move more wildly more often than some of the more subdued moves. So I'm trying to tie it all together for you: implied move, EVR, etc. So graphically, again, you can see here that last earnings event. Well, another way to see it in the chart, in the table below, is, okay, the implied move was 8.75%, of the stock price. The max move during that one trading day was 5.73. The closing move was somewhat less than that. If you'll remember, I'm going to bring that closing move into this page as well so that you don't have to toggle back, but it's easy to do so. You can simply right-click on the earnings history page, open the link in a new tab, or for that matter, let me close that and do it this way. Open that link in a new window, and then you can see the earnings history page with the, you can hide that right side sidebar menu, with the closing percentage move and the max percentage move of the negative 5.73 on the same page, right next to, but like I said, I'm going to bring that closing move into this page as well so that you don't need to toggle back. And then we use a little indicator here, I for inside the implied move, O for outside the implied move, and we'll do that for the closing move as well. When we add that, that will be coming very soon. And then one other additional thing that you can see is these last columns represent, had you gone long the straddle at $19, at a debit of $19.69, that straddle would have been, by the close of the following day, worth $12.77, representing a 35% loss of capital. Consequently, had you shorted the straddle, the one-day return would have been a 35% positive return. So just some quick statistics there for you based on some implied move tracking. One other thing I'd like to show you while we're on this page is this specific data. And if you just choose, if we go back to the May 4th earnings event and click the submit button, the page refreshes and populates another table showing you all the specific data that we collected. We started collecting data on April 25th. At that time, the at-the-money position was the 255 straddle for a 10.8%. Let's go to the previous earnings. That was an interesting one. The February 10th, let's take a look at that data. The February 10th earnings event, the at-the-money straddle was the 197.50, priced at $21.05 for approximately a 10.65% implied move. But by the time we got to the final capture of at-the-money straddles, right before the earnings event, the day of, the implied move had moved up to 15.83%. That brings me to, I almost forgot to show you the implied move candle. And as this is very common to see, now this chart, what this chart shows you is a representation of the implied move itself, is the red candles now. The red candles are representing the implied move itself and how it evolved over time based on this table of captures, okay? And in this particular case, it started out at 10.65 and ended up at 15.83. That's why you see it started out here at the bottom, and in Japanese candlestick form, it got as high as the wick, but it closed at 15.83, okay? So this is, again, like I said and mentioned, this is the exception and not the rule, to have implied volatility build to the point where it actually outperforms theta decay in those final 2 weeks. However, many of the strategies that we employ as we approach earnings events count on implied volatility to build to help offset the theta decay that we know is inevitable. Okay? Not completely offset it, but at least partially help to offset the theta decay. And in this particular instance, it was a complete So here's an extreme and out of the ordinary event where the implied move actually increased going into the event, outperforming phase gate. And then the gold bar down here just gives you the actual move. So again, overstated by the implied move. The actual one-day move was quite subdued compared to the implied. All right, so let's see. Back to, all right, so next thing on our agenda is to get to the post-earnings tracking. So we can use, all right, so I'm going to move on to another page at OptionSlam.com, and it's the post-earnings page. The post-earnings page can be used primarily for two things. You can use the post-earnings page. Many traders say, you know what, I'm going to wait. You know, a lot of traders like to trade. All right, let me put it this way. The way I think of trading earnings, there's three different ways you can approach earnings, right? There's the pre-earnings trade. That's the trade that can be done weeks prior to the earnings event, looking for an implied volatility build. Generally, those trades are done with the expectation of closing the trade prior to the actual earnings event. So that is what I call a pre-earnings trade. A through earnings trade is one that you initiate right before the earnings event. For example, Tesla is going to report today after the close. So if you were going to do a through the earnings trade, you could initiate a trade. In other words, put the trade on today, hold the trade through the earnings event, knowing that you're going to experience an implied volatility crush. Many of the through earnings trades that I like to do take advantage of implied volatility crush. For example, selling a naked strangle, or selling vertical spreads, or even selling an iron condor. Premium collection, looking for the advantage, looking for the implied volatility crush to benefit my strategy. Or the third kind of an earnings strategy is wait until after the earnings event and then initiate the trade post-earnings. So the post-earnings tracking page can be used for two things, either to help you initiate a trade after the earnings event or to manage a through the earnings trade. For example, well, let's use the post-earnings page to manage your existing trade. So let's go over to back to OptionSlam.com, and let's go, now we're still on the Tesla page here. The black bar, like I mentioned, let me close the pop-up. The black bar, like I mentioned, has multiple different pages that are all specific to this stock. Again, a reminder, if you want to go to another symbol, you simply type the symbol up here next to the red Go button. If you want to go to another symbol but stay on the implied move weekly page, then you just type another symbol or pick from the drop down. And this will take you to the implied move weekly page of whatever stock you choose. Either you type in the symbol in or choose from the drop down. I'm going to go back to Tesla just by clicking the back button. And now I'm going to go to Tesla's post-earnings page by left-clicking on post-earnings page here. Now the post-earnings page, we scroll down, and instead of just showing the one-day event, the one trading day post-earnings, we go on out and show 3 days, 5 days post-earnings, etc., etc. Now let me clarify. The percentages represented are the price change relative to the pre-earnings close for the specified number of calendar days, okay? So the 1 day, this is the closing change. This is not the max move, but the closing move, the final one-day move, 1 day after the earnings event. So the pre-earnings close was 222. 1 day later, the stock was down by 4.95% by the close of the following day. Now notice, on this page, we label what day of that week it was, because this is important to notice that 3 days later, right, 3 trading days later would be what? Wednesday after the close. 3 trading days later would be Saturday, wouldn't it? Right? Thursday would be the 1 day. Friday would be the 2 day. Saturday would be the 3 day. Well, trading is not happening on Saturday, so this is really the 2 day number. This is designed so that it works regardless of what day of the week, but you need to mentally adjust to which column you want to focus your attention at. Okay, so for example, here's a Tuesday reporting day. 3 days would still be the right column to focus your attention on, because Wednesday would be the 1 day, Thursday, Tuesday, and 2 days, and Friday would be the 3rd day. So the 3 day column gives you the front week expiration regardless of whether this stock reported on Tuesday, Wednesday, or Thursday, right? Only if the stock reported on Monday before the open would you then focus your attention on the 5 day to see the front week weekly expiration. Okay, does that make sense? I just wanted to make some clarification because this is a question that comes up every now and again. So again, here, back to some of the ways that this page can be used. You can wait until, for example, to initiate your trade by looking at this page and say, well, if Tesla has a down day post-earnings, what does it generally do on down earnings events? Well, last earnings event, within the first few days, it kind of went sideways, but then after about 5 days, it started building some momentum to the downside. Within 2 weeks, it took a 5% down move and increased it all the way to 8% down. However, after about 3 weeks, 21 days, it had recovered almost all of the losses, coming back to very close to the 222 pre-earnings close. How does Tesla react to up moves? Well, on the February 10th earnings event, the 1 day move was almost 5%. Within 3 days, it was still at around 5%. But by 8 days, it had increased substantially up to 16%, and even more so going into 2 weeks and 3 weeks out. Crazy numbers beyond that, but the evidence does not support those crazy numbers as you look at other earnings events. So this one was an outlier type of a follow-through, more so than what is more typically expected. Now, many stocks you will be able to easily discern patterns here on this page, that stocks continue to follow through the 1 day move, or they go sideways beyond the 1 day move. Every stock develops its own personality in that way. I see that we're starting to run out of time, so I'm going to, let me just say this, how you can use this page to help you manage through the earnings trade. That's the trade that I mentioned where you put the trade on prior to the earnings event, and then now you have gone through the implied volatility crush. Now it's the day after earnings. you can take a look and see from going to the post-earnings page. So let's say you put on a trade and you were correct about, let's say you put on a directional trade and you were correct about, let's say you put on a bullish trade here, and now it's one day after, and you say, well, what does the stock usually do after a bullish move post-earnings? Well, back in February, it continued to move up and up and up. So that's some evidence for you to possibly hold your trade longer and give it some time to work. However, the evidence here is a little bit, here's a one-day move. The evidence here is a little bit contradictory in that here's a one-day move that gave back within a week and 2 weeks, providing some evidence that if you have a large move, maybe it's time to take your profits and run. Okay, so that's a couple different ways either to help you manage a through the earnings trade or to initiate a post-earnings trade.